as they say that liars can figures can't lie, but liars can figure. You know, you might get somebody who says, well, you know what, I traded through the last recession and we came out, you know, 3% ahead. And, you know, it's like, oh my God, you know, everybody else lost 50%, you know, but in all reality, if he told you the rest of the story, his adverse excursion, how much did you lose from top to bottom during the recession, you know, which could be 50%, you know, which it was for most people. That's the adverse excursion. Even though he held on, he bought at the top and he held all the way through the recession and he sold at the top. He could say his trade made 3% through the recession. But you and I both know that you lost 50% along the way. And so many people can't lose 50% and sleep at night. You know, if you have $100,000 to begin with and you lost $50,000, it always goes through your mind, what in the world, how long did it take me to earn $50,000? And I just lost it in a month. So, so adverse excursion is what keeps you awake at night and is very unhealthy for the normal regular person. So adverse excursion for the NASDAQ this last week, it actually lost 3% between last Tuesday and this morning. So even though it's up 1%, it lost 3% along the way at one point. So you know, that's what volatility is. So today we are blessed to have an engineer in the room, a real one. Paul is just so awesome. I thank you so much, Paul, for being here. He didn't turn his phone down. You know, normally before we start the movie, you know, the commercial comes up saying to turn your cell phones off, and we missed that part.
And I'm the engineer.
But thank you so much for being here. Hallelujah. So now we're down 8% year to date. We're up about 0.5% over the last week. In my own estimation, as far as technical analysis is concerned, we seem to have put together a floor, a support level that's about 0.5% below where we're at right now. So in my own estimation, unless there's bad news or something, you know, goes on, I'm having a feeling that we might have a little bit of an increase between now and next Tuesday. So you can take that to the bank. Oh my Lord, there's me on the TV.
That's gonna have
Holy smoke. Who is that good looking guy? That's Paul, the good looking guy.
Wait till I get my face out of the microphone. I was going to have you tell your listeners they can catch you on Janesville Community Radio's Google page, or I'm sorry, YouTube, both.
So Janesville Radio has a YouTube page. Is that a YouTube page that you can actually tune in live?
And watch you live right now.
So kind of like me and Rush Limbaugh, we're in the same kind of category now, right? You can watch him live, but you got to pay to watch him live if I'm thinking correctly.
Right, and I don't get sick when I see you.
And I don't watch him, so. Although I do like some of the stuff he talks about, but I never listen. But I read about it every now and again. So I'm one of those, I think everybody that, if somebody is actually listening to me right now, you know, they probably have a good idea that I don't fit on either side of the aisle. I think that Democrats stand for large government, you know, and that's obviously just, you know, a big, huge category. And Republicans stand for big business. And to me, big government and big business are exactly the same thing. And that's why nothing ever gets done in this world. And that's actually going to be one of the big topics that we'll be covering later. Last week, we spent a lot of time talking about Michael Lewis's book, The Flash Boys. And this week, I mean, how can you cover a whole book in an hour, right? I mean, when you don't even spend the whole hour on any one thing. So there's headlines this week that actually refer to that book, and we're going to cover that. I just find it fascinating, and Wall Street is so crooked. Oh my Lord, this is like the proof in the pudding, and it's the proof that the SEC, you know, the fox watching the hen house, is as crooked as the whole rest of the hen house that they're watching. I find it fascinating that everybody knows about this and nobody's doing anything about it. But in the headlines this morning, which we're going to get to headlines next, one of the headlines is actually kind of where they were forced to do something about some of the biggest cheaters. So we'll get into that. So anyways, to follow up with the market, we're down about 8% year to date. And I think that we're setting up some pretty solid footing. I think that there's enough support just below where we're at right now that we should get a nice little push off of that floor over the next week. And if I'm wrong, it's somebody else's fault. Something probably happened that is this is earnings season now. And in fact, the first headline actually discusses the results of earnings season. Alphabet stock, not Alphabet Soup, Alphabet stock, which is of course Google's holding company. Google had another good earnings round, and they actually overtook Apple to be the largest publicly traded company in the world. Google, baby. Can you believe that? That's just, wow. Apple has really been, Jobs shouldn't have died. Seems like they're starting to flounder just a little bit. So we'll see what happens next. But Google is all there, man. I've said so many times, I love Google. I love how much they do for free, and obviously part of that is the carrot in front of your face, trying to get you out to where you actually spend some money on this or that. But actually using Google products, I mean, my goodness gracious, the Google Calendar, they have so many apps that are so helpful that are free. It's just wonderful. I was one of the very first Gmail users. It's just amazing how far what Google does for humanity for free. So I love it. More headlines. Now this is funny. On this last week on the morning show, Reese Wood interviewed Tammy Aronowitz-Goldstein, I believe. So Tammy, if you're listening, I apologize if I butchered your name. But Tammy is one amazing young lady in Janesville. She's a national figure for vaccine damage that is done to people. And of course, to me, this is another one of those things that the government just lies to us about as to how healthy all this vaccination garbage is for us. And they're just hiding all the real facts. But, one of the headlines was there's an outbreak of the Zika virus. Zika, Zika, whatever. And I read one of the articles Tammy posted this week as to how the World Health Organization has people behind that want to scare you for some reason or other, that's really not any major condition. So I find that fascinating. Now, next headline. The headline says, targeting more ways to help Puerto Rico pay off nearly $72 billion in debt. Puerto Rico has been one of our 4 trigger points, and it kind of comes and goes a little bit. But it's right now they are working on a way to get rid of about half of their debt. So basically, all of this debt, the $72 billion, is insured. And if they get rid of half of it, don't think that the people who are getting dissed on the half that they're going to get rid of aren't going to file for the insurance claim. And there's already lawsuits between them and the insurance companies that are backing that up. So there's going to be some major heart palpitations going on in the news regarding that. So just hang on. Puerto Rico is going to be in play, and we'll see how that affects the markets. Here's a fascinating headline. Last night, Ted Cruz defeated Donald Trump. So you say, well, that's politics, John. Why in the world, as a business and finance program talking about politics? Well, number one, I hate politics. And you could probably lump a lot of politicians into that category. I know hate's a strong word, but it's pretty accurate as far as I'm concerned. But the reason I'm bringing it up is because the market will react based off of how this whole election goes, because the market likes to have status quo. All these crooked people on Wall Street love to have crooked people on the government side of the aisle. And if we get, a Bernie Sanders who is not an insider, he has his own thoughts. If we get a Donald Trump who has his own thoughts, he is not an insider. That will definitely, all of that unknownness will affect the stock markets. So it'll be a lot of fun to watch this. It has been a lot of fun. I mean, goodness gracious, when's the last time we had this kind of drama in a presidential election? My goodness gracious, it's been kind of fun to read about. Okay, individual stocks. The headline, we all know that oil prices are fantastic right now when you pull up to the gas station. Oh my goodness, how good does it feel to fill up your tank on $20, man? It is beautiful. I remember for our minivan not that long ago, it was like $75 to fill up the tank. Hallelujah. But that's very bad for the economy. It's like, if you ask me, who cares? Let the economy go to tatters. I want to spend $20 to fill up my tank. But British Petroleum has reported its worst annual loss in 20 years. Good for them. I don't care. I don't own British Petroleum, and anybody that has, there's probably people who are trying to buy low right now, and maybe they're hanging on to it, and getting beat up, but not me, baby. Next one, Standard & Poor's has lowered its credit rating on Royal Dutch Shell and placed the major oil companies, British Petroleum, Repsol, Statoil, Total, they've put them all on negative watches or have downgraded them. I find that fascinating. In fact, Standard & Poor's, I saw this movie this last week called The Big Short. The Big Short, oh my goodness gracious, that's a radio program all by itself. And we've talked about this before. We've talked about credit default swaps and CDOs and how they work and what happened in the last downturn. But this movie, in fact, this movie's made off of a book from Michael Lewis, who wrote The Flash Boys, which we're of course covering now. And the name of the book was The Big Short. And it talks about the credit default swaps, the CDOs, all the baloney, all the cheating, all the lying that was going on at Wall Street. And a few people caught on to it in some crazy ways. And it took a beating. I mean, talk about adverse excursion. They've dealt with some pretty bad adverse excursion from the time that they bought. They were going to make money. They shorted. That's why it's called the Big Short. The shorting is if you're betting on something going down, and if it goes down, your profit goes up. So they shorted. They shorted the housing market. Is effectively what they did. Yet Wall Street, and the movie is so good. I never read the book, but the movie was so good. But all the Wall Street players were lying and cheating, and they were not let. And we're talking Standard & Poor's too. So this last headline was Standard & Poor's has lowered its credit rating. Standard & Poor's would not lower its credit ratings. Lowering the credit ratings of these investments they had shorted would have made them profitable much sooner. But S&P is paid to give ratings, and that's a problem. There's some they profit if they don't. They profit more if they lie, and there was really nobody keeping them from lying. So anyways, that's an awesome movie, and we're going to cover that again because it's part of our history lesson, right? There's now CDOs again coming into the marketplace. We're 7-8 years later into a recovery in the stock market. Stock market's up 250% since the bottom. But we are now back to the point where they're starting to do the same garbage all over again. So we are going to cover that. It's just not going to be this week. Now, here's here is the headline that I put the star next to. Yesterday's settlements by Barclays and Credit Suisse for misrepresenting their private stock trading sites are unlikely to be the last as regulators continue to pursue abuses in electronic trading. And it goes on. According to the research firm Tab Group was mentioned substantially in the Flash Boys. So Tab Group is actually the good guys keeping, it's Foghorn Leghorn keeping track of the chicken coop, not the fox watching the chicken coop. He says, according to the research firm Tab Group, about 42% of the average daily trade volume is handled in the, quote, dark, unquote, meaning information about trades isn't publicly known before they're executed. And while the pools have existed for decades, they have become more popular in recent years due to the increase in high-frequency trading. So we are going to cover more of that, and we're going to start after our first break. And in this first break, we get to listen to my lovely wife's music. Our album just came out, and this is one of my favorite songs on it, and it is called Are You the One? We'll see you in a couple minutes.
Are you the one who's there for me? Are you the one to whom I bend my knee? Are you the one who sets the captives free? Are you the one who gives us liberty? Are you the one? Are you the one who was foreseen? Are you the one who's real and yet unseen? Are you the one concealed in such mystery? Are you the one who gives us victory? Are you the one? Are you the one who loves me? Who loves me? Are you the one? Are you the one? You are the one. You are the one who
Programming for WADR 103.5 LPFM brought to you by Avia Salon and Spa is a full-service day spa located in downtown Janesville, Wisconsin. Open Monday through Saturday at 9 a.m. and 10 a.m. Sunday. Located at 500 East Milwaukee Street, providing hairstyling and coloring, manicures and pedicures, skin treatments, and massage therapies. For appointments, call 608-755-5800. Located on the web at www.avia.com. Avia Salon and Spa.
Program support for 103.5 FM WADR Janesville Community Radio, sponsored in part by A Plus Insulation, air sealing, attic insulation, spray foam, and more. Telephone number 608-778-3233. Online at a-plus-insulation.com. A Plus Insulation. Online at a-plus-insulation.com. Telephone number 608-778-3233.
Program. Welcome back to Rock Paper Dollars. This is your host, John Norquay, and you're listening on WADR 103.5 FM here in a overcast, kind of cloudy, 20-ish degree, what I would say, 25 maybe, degree day here in Janesville, Wisconsin. So glad we missed that nasty storm, man. Anyhow, that song that we just introed with, I made, 2 nights ago. So, and on the next break, as we come in from the next break, we're going to use another song that I developed a couple nights ago. It's kind of fun. I enjoy doing that kind of stuff. It's kind of crazy, but it is what it is, as they say. Now, we are going to spend this next segment talking about dark pools. So, a dark pool, just before the last break, we're covering a headline that Barclays and Credit Suisse just got slam dunked on cheating. Cheating in their dark pools. But again, quickly, the headline says yesterday's state settlements by Barclays and Credit Suisse, and their settlements, of course, so that nobody's going to get sent to jail, none of this kind of stuff, because they're settling. For misrepresenting their private stock trading sites are unlikely, and their private stock trading sites is the dark pool, are unlikely to be the last as regulators continue to pursue abuses in electronic trading. According to the research firm Tab Group, about 42% of the average daily trade volume is handled in the dark, meaning information about trades isn't publicly known before they're executed. While the pools have existed for decades, they have become more popular in recent years due to the increase in high-frequency trading. So 42%, can you imagine that? Everything that's happening on the New York Stock Exchange and the NASDAQ and the 11 other exchanges that are pretty much all owned by the New York Stock Exchange and the NASDAQ now. Kind of funny how that works. 42%, almost half of the entire volume is actually not even put on the stock exchanges. They're done in these pools. And you might say, well, why in the world is all of this done in the dark as opposed to being on an exchange? Well, last week when we started talking about the problem that created this book, Flash Boys, the problem was Brad Katsuyama, who was a trader on Wall Street for the Royal Bank of Canada, before electronic trading occurred, and electronic trading pretty much took over in 2007 or so. But before electronic trading, and he started in Wall Street in 2002. So he had a number of years where he, traded normally. And normally says that if your screen says that there's 10,000 shares of Apple available at this price, that you can click your button, and all of a sudden now you got 10,000 shares of Apple at that price. So, whether Apple goes up or whether Apple goes down from there, that's on you. Nobody knows exactly what's going to happen, but it's kind of like me right now saying, okay, I think that the market has hit a stable point and probably will bounce up off of this new stable point. Well, somebody might buy Apple at its current price thinking it's going to bounce up, and they want these shares at this price, and they're willing to take that bet. So that is normal. And in 2007, it became abnormal, according to, well, Brad is the one that actually brought it to light. Everybody started experiencing the same problems, but he's the only one that really started researching, because it was costing him millions and millions and millions of dollars. When I say costing him, costing the clients of the Royal Bank of Canada, because it's not like the stock market where everybody can win. If you buy a stock and it goes up, then you win, everybody wins. This is a deal where if you lose $1 million, somebody else made $1 million. It's a zero-sum game. So Brad's people were losing millions and millions and millions of dollars, and it was just not acceptable because he couldn't explain it. So So that's the problem. The problem was, as soon as he started, let's say his screen said, okay, there's 10,000 shares of Apple at this price. He would say, okay, I want those 10,000 shares, hit the enter key to buy them. And he might get 100 shares instead of 10,000 shares. And then all of a sudden the price on Apple goes up. So now if he wants to fill the other 9,900 shares, he's got to pay more. And that's just... And again, it's not him, it's his people. It's you and me out there trying to buy shares on the market. So in response to that, all these broker dealers come up with dark pools. So now let's say that you have TD Ameritrade, or you have Wells Fargo, or you have Merrill Lynch, or Goldman Sachs, or Credit Suisse, or Citibank, that JP Morgan Chase, Morgan Stanley, all these guys created dark pools. So let's say that you now want to buy 10,000 shares of Apple. You look at what the market says the price is, and you can go into their dark pool. Actually, they don't even tell you, but they go into their dark pool and they make a deal with somebody else to buy that many shares for you at whatever price you get. And the market never knows anything about it. So you're actually able to get the shares that you want at the price that you said you didn't want to pay anything more than, and the market doesn't move because of it. So that's what a dark pool's initial, they're trying to get a solution. And that's how the dark, to the problem, and that's how the dark pools came about. Unfortunately, this is all happening on Wall Street, and the dark pools find out that there's a whole lot of money to be made from high frequency trading within their dark pools. So they start actually selling the ability for these high frequency traders to see their orders before they're placed. So the high frequency traders can actually make money on every single trade that is going on in the dark pool. There's a guy, he's mentioned in the book, but he ran a mutual fund, and after Brad Katsuyama talked to him, he actually read, and maybe this was before Brad talked to him, but he was noticing the problem as well. So he did an experiment. He said, well, what if I actually traded a stock to myself? what would happen. So, and it was a stock that was pretty illiquid, meaning there's not a whole lot of trades going on in the stock. So he took a stock and he put a sell order on it and a buy order on it. And he should have been able to sell it to himself without at the same price if the system was working correctly and nobody was cheating him. But as it turned out, he sold the stock more to himself. You know, it cost him more to buy it than to sell it. And that to him was, and he did this many times, and it was proof that whoever's doing the trading for him was making the money and taking it from him. So anyways, so the dark pools were created to address the problem, but then they realize that there's people willing to pay them good millions and millions and millions and millions of dollars for the ability to see those trades before they're executed. Okay, so now, and after this next break, we're going to actually talk about the schematics, how high frequency trading makes money on every trade. But the dark pools, again, we'd mentioned how all of the major banks, all the major brokerages, everybody started creating their own dark pools. I have a list here from Wikipedia. There's JP Morgan Chase Bank, Barclays, BNP Paribas, Bank of New York, Mellon, Citigroup, Credit Agricole, Credit Suisse, Deutsche Bank, Fidelity, Getco, Goldman Sachs, Knight Capital Group, Merrill Lynch, Morgan Stanley, UBS is huge into it, Societe Generale, Daiwa, Wells Fargo Securities, which it says has now closed. But then the New York Stock Exchange has their own dark pool. So if you want to work with them, you can do it in the dark if you want to. The batch trading, which is probably one of the biggest cheaters in the exchange market. So anyways, these dark pools are everywhere on Wall Street. That's why it's 42% of everything that gets traded in a day, 42% of it is done in the dark. So there's an article from CNBC that addresses this, and this just came out yesterday. It says regulators may have won about $150 million from Credit Suisse and Barclays. And you know what? Between you and me, I'll bet you they make more than that in one day from what they're doing. And they get hit with 150 million only for behavior in their dark pools. But the closed trading platforms are still wildly popular. According to reports released by dark pool operators in January, dark pool trading in Europe was up 45% by value and 25% by volume in December compared to the previous year. Financial industry regulatory authorities show a similarly large increase in stocks traded in dark pools, 22% more shares in the third quarter of 2015 than the same time in 2014. It's like, how crazy is this? They know what's going on, and yet they still let it happen. Crossfinder, one of two Credit Suisse dark pools involved in the regulatory action, remains one of the most popular pools on the market, according to the most recent data from FINRA. Barclays LX dark pool, which also has been targeted by regulators for over a year for allegedly misleading consumers, was one of the few dark pools to not see substantial growth. So it goes on to say the largest regulatory action against dark pools before Sunday settlement was only $20.3 million, leveled against Investment Technology Group in August after the firm profited off of confidential consumer information by opening a secret trading desk within its own dark pool. The incident coincided with a reduced interest in the firm's POSIT dark pool. It's like, oh my goodness gracious. Wow. So many levels of cheating. But it actually shows a chart of the growth over the last year. And in this Crossfinder pool that is getting nicked the fine looks exactly, I mean, the chart, I had a hard time seeing the other one because it was like right next to it is from UBS, the Union Bank of Switzerland, the company that I used to work for 5 years. But UBS, and I left there because I didn't like what I saw. But UBS is almost identical. So when they say that there's going to be more fines coming, I'll bet you UBS, UBS has to be one that but UBS has gotten fined for absolutely everything under the sun. You know, they're rigging the interest rates. They've rigged LIBOR. Basically, they, oh my goodness, so many different things. But if you remember last week, one of the things that I was talking about, the solution that Brad Katsuyama came up with to circumvent all this cheating on the trading side and taking money from you and me, was coming up with their own dark pool and turning it into a national securities exchange. So a direct competitor with the New York Stock Exchange, and it's called IEX, Investors Exchange. And you look on this dark pool list, and IEX is third in volume increase compared to Crossfinder and UBS. Crossfinder was first, UBS is second, IEX is third. So they're offering something where people cannot high frequency trade you out of your own profits. And it's actually catching on. People like you and me are understanding that it's available and actually starting to use it. So on that note, next song for the break, let's do Reach for Love. So what's that? Reach for Love, you got it. Yeah. So we're going to take a break. As soon as we come back, we're going to finish this dark pool discussion, and we're going to go into how high frequency trading actually works. How are they taking your money? So you are listening to Rock, Paper, Dollars to your host, John Norquay on WADR. Reach for Love is up next. Sherry Norquay.
Take a moment to pause, to hear a message of love, words meant to wonder, ringing louder than thunder. Looking for answers wherever you can find, even in a fortune cookie, you look for a sign, leaving you empty. Where's truth to be found? Oh, just listen to your heart. Reach for love, reach for love, oh, reach for love, reach for love, reach for love, oh, reach for love. Now look at yourself. No way, look deep down inside. Have you been honest? Is it just a disguise? Oh, let me tell you the stories of love. Yes, they come from the good Lord above. Reach for love, reach for love, oh, reach for love, reach for love.
Program support for 103.5 FM WADR Janesville Community Radio, sponsored in part by A Plus Insulation, air sealing, attic insulation, spray foam, and more. Telephone number 608-778-3233. Online at a-plus-insulation.com. A Plus Insulation. Online at a-plus-insulation.com. Telephone number 608-778-3233.
Programming for WADR LP 1035 FM in Janesville, Wisconsin, sponsored in part by Home Again Consignment Home Furnishings. Home furnishings from candlesticks to couches. Located in downtown Janesville at 215 West Milwaukee Street. Open Monday through Friday, 9 to 5 p.m. and Saturday through Sunday, 11 to 4 p.m. On the web at homeagainconsignments.com. By phone at 608-314-0404. Home Again Consignments.
Program.
Welcome back to Rock, Paper, Dollars. This is your host, John Norquay, here on WADR 103.5 FM. That intro song was called Papa's Jam. I called it Papa's Jam because when I was doing it, my little granddaughter was there kind of hanging out with me, and it was just kind of so cute. She's so sweet. Anyways, that's my little Willow. Okay, we've been talking about dark pools, going back to the cesspool of Wall Street here. I'm going to finish this article that came from CNBC regarding the dark pools. It was just, released yesterday. And then we're going to go into some analogies about how high-frequency trading works. But as I had already said, UBS, I think, is going to be the next one that gets hit with fines for because their chart looks identical to Crossfinder, and Crossfinder is the one that is paying the fines right now. So, but here it says Barclays and Credit Suisse allegedly made false statements and omissions in the marketing of those pools, in some cases suggesting that they would protect customers against predatory traders without actually doing so, according to the New York Attorney General. So they told their clients that they didn't allow this cheating to be going on in their dark pools, this high frequency trading that goes against them. And in all reality, they were. How are you and I supposed to know? So they're again, but then the next one says these largest ever penalties imposed in SEC cases involving two of the largest alternative trading systems, so that firms pay a steep price when they mislead subscribers. That's hilarious. Like I said, I bet you they make they make profits that would cover that within a week for sure. It's crazy. Because remember, when we first started talking about high frequency trading, they determined that one trader would be able to make up to $22 billion of profit per year by high frequency trading. It's like, oh my God. And then you take what? One little pinch off of that. Who cares? Do you think that's going to slow them down? Not a bit. So anyways, and as we already know, the SEC is in it with them. So why in the world is the SEC going to do anything about it? The SEC has had, from what the book said, over 200 people, and this was by the time that the book was written, they had 200 people that actually had defected from the SEC to the high frequency trading firms because they're giving them so much money. So you have this total intermarriage between the SEC and the high frequency traders that it's just ridiculous. And then you have the New York Stock Exchange, which everybody thinks are the good guys, and they're selling space right next to their servers. It's called co-location. For millions and millions of dollars, they sell the space right next to their servers to these high frequency trading firms so that these people can get in front of our orders, buy them ahead of us, and sell it to us for an increased price. So on that, I am ranting. I know it. I hate listening to people when all they do is rant. But this is ridiculous. So, hey, the next thing I promised to talk to you was how flash trading works. How does this actually go against you? And it's a perfect analogy. Paul and I were just talking about it during the break. But if you remember, it's a Richard Pryor movie. Richard Pryor was in Superman 3. And it seems like an eternity ago. But he was the computer dude. And he was seeing payroll checks that, if this person, the computer would take it out past 2 digits. So let's say that you're going to get a $500 paycheck. It said 500.98764321. Well, Richard Pryor saw on the computer that it was actually taking the point, it's $500.98, and then it carried it out a few more digits, So, but they were rounding down every penny. Instead of rounding up ever, they always rounded down. So Richard Pryor asked the boss, what's up with that? Where are all these pennies going for all these gazillions and gazillions and gazillions of paychecks? And they say, well, I don't know. Well, the company's keeping it. So, and the guy acted like he didn't care. So Richard Pryor writes a program where it takes every single rounding down and it sends it to his account. I think they showed his very first paycheck being $84,000 and some odd cents, and it was his eyes bug out, and yeah, kind of like somebody else, was not mine. But absolutely hilarious. And then when they find out that there's money missing from their accounts, because they're not getting the rounding down anymore. Again, it's a zero-sum game, right? Somebody is making money, somebody else is losing money when it comes to this stuff. They're wondering where all that money went from there, that they expected to get. And they say, well, as part of our sleuthing, we should probably start to look for somebody who's spending more money than usual. and all of a sudden they hear squealing outside in the parking lot as this new Ferrari comes flying in and Richard Pryor gets out. What an idiot. Anyways, I love it. So, the high frequency traders are a little smarter than Richard Pryor, but to me, I don't think by very much. Well, they're way smarter, but anyways, so I am going to, oh my Lord, we only have 7 minutes left in the whole entire hour. I'm going to give you a brief reminder of what we covered last week. And number one, remember that these guys work on microseconds. It used to be that it took 150 microseconds to make a trade, and they've got it down to like 1.5 microseconds to be able to make a trade. Now, what's a microsecond? What's a millisecond? Well, we all know what seconds are, but if you look at a second, if you look at a millisecond compared to a microsecond, it's like 11 and a half days, because it's a millisecond is 1,000. It takes 1,000 milliseconds to make a second. So if you look at that with seconds, because we all know how long a second is, a second, 1,000 seconds is 1,000 seconds. Is it a million? 1,000 seconds. 11 and a half days. Here it is. A millisecond to a second is like 11 and a half days compared to a second. So it's a million. It's a millionth. That's why a milli probably. But it's like 11 and a half days. That's forever. It's forever. It takes like 100 milliseconds to blink. And it's the same relationship from a microsecond to a millisecond. It's like 11 and a half days. A second, a millisecond to a second is like 11 and a half days. So to the computer, there's nothing going on for 11 and a half days and then one thing. And then to us, it's like lickety split. So these high frequency traders are dealing in microseconds. Okay. So what happens is they have paid the New York Stock Exchange, the NASDAQ exchange. They have paid for all of these services to be so close, and they've spent so much money to have the most direct routes into what they call it's the computer that matches offers and bids. So the matching engine is what they call it, which is their servers at the exchange. So since they have faster access to those servers, there's a time difference. So everybody says that if you could actually build a time machine, what's the first thing you would do? And everybody says, well, I'd go back and I'd play the stock market. Right? Is that what you do, Paul? Because you could get rich quick if you knew what was going to be going on with the price of a stock.
Some lottery tickets, maybe. Slot
Well,
machines.
yeah, isn't that true?
Same thing,
With the
right?
stock market, you could probably make a whole lot more, a whole lot faster. So, but yeah, that's exactly right. Because you know what's going to happen next. So you can always be right without taking risk. And that's exactly what high frequency trading does, is they actually have access to the prices in the future compared to you. So it's like they have found a time machine. You're looking at a price, let's say Apple for $25. If you are looking where you think you can buy Apple for $25, they're looking into the future. So they say, oh no, we can buy it for 24 and a half and sell it to you for 25. And that's what somebody said to me at one time in this last week as we were discussing it. They were like, well, if I put my order in, I don't want to pay for anything but $25, then there's no way that they can high frequency trade that. It's like, you're wrong, because, and this is what goes on in the dark pools too, the person who says, okay, I'm happy to buy an Apple at 25. That's you're saying that because you're seeing that it's that it's going for 25, when in all reality, it might be going for 24 and a half. And you would say, if you saw it going for 24 and a half, you wouldn't say 25, you'd say 24 and a half. So the bottom line is everybody should have the same information. Everybody should start at the starting line when you run the 100-yard dash, right? Why should you give somebody, especially somebody faster than you, why would you give them a 10-yard head start if they're faster than you in the first place? That's ridiculous. So everybody should have the same opportunity. Everybody should have the same starting line. And that's what Investors Exchange has actually done in all of this. They've wrapped 38 miles of fiber, of light, of optical fiber. And it's 11:58 now, 2 minutes. Oh my goodness. 38 miles. So these high frequency traders have to go through 38 miles of fiber before they get to the starting line, because if they have to go through, it's been determined if they have to go that far, then there's no way they can see the future before you actually make your trade. They cannot hose you if they have to go that distance. So International Investors Exchange, IEXtrading.com, are the good guys. And I'm crazy about their whole entire character, their ideals. Let's go out with one of my songs, one of the new ones. Let's do the rock, Papa's Rock. But I'm going to leave you now, and we're going to come back next week, I think, and talk more about CDOs and CDSs, because we've learned from history that they're horrible. They're coming back again, and we'll go from there. So you're listening to WADR 103.5 Rock Paper Dollars. John Norquay. We're out on Papa's Rock.